successfully implementing materiality assessments and engaging the stakeholders. Finally, we'll discuss actionable steps you can take to prioritize materiality and improve the stakeholder engagement in your organization. So today we are honored to have our distinguished speakers from BDO East Africa, Kenya, and BDO India with us today. They bring a wealth of knowledge and experience in sustainability, corporate governance, and stakeholder engagement. The first speaker for today is Mr. Zahir Sheikh. Zahir Sheikh is the partner of risk advisory, internal audit, and forensic services at BDO in East Africa offices in Kenya, Uganda, Tanzania, Rwanda, and Ethiopia. Zahir is a dynamic leader with a high public profile and has been a market leader in his chosen markets and services. Before joining BDO, he was the regional partner responsible for financial advisory services at KPMG in East Africa, where he was there for 24 years, primarily in Kenya, Uganda, and Tanzania. Zahir has over 35 years of experience, 7 in which he gained them in the UK, and 24 years of experience gained at KPMG in Africa. As a regional partner of the Forensic Services Business Unit, Zahir is involved in managing large and complex investigations, providing expert testimony in court and testing and designing internal control systems, arbitrating disputes, providing fraud management services, asset tracing and money laundering, ethics, as well as integrity building programs, fraud surveys, training courses, and fraud risk and corporate governance. So, Zahir Sheikh is extensive experience and leadership in risk advisory has significantly impacted the industry, providing valuable insights into managing risks and mitigating risks effectively, both the risk and the fraud risks. The second panelist today is Mr. Hindra Guha, who is a partner in the sustainability and ESG team of business advisor services at BDO in India. Mr. Hindra has over 25 years of professional experience in the domain of sustainability, ESG, and climate change. He focuses on making sustainability actionable and measurable, advising organizations in developing vision, goals, targets, and roadmap on sustainability, ESG, assisting with identifying risks and opportunities and integrating those risks into ESG into the enterprise risk. Indra has worked across diverse industry sectors and with the government, IFIs, and NGOs. Apart from extensively working in India market, he has also engaged with multiple business associates in the Middle East, Europe, and South Asia. So Indra's vast experience and expertise in sustainability and ESG make him a valuable resource for organizations looking to enhance their sustainability practices and managing the ESG risks effectively. His global perspective and practice approach to sustainability will provide insightful guidance for the webinar, for today's webinar in market accessibility. Lastly, the last presenter we have Dr. Tarini, is a director in the sustainability and ESG team of business advisor services at BDO in India. He has over 16 years of professional experience in the domain of sustainability, EHS, ESG, and climate change. Dr. Tarini has worked in engagement with corporate clientele on projects related to corporate reporting, involving sustainability and climate change advisory, and mobilizing thought leadership on responsible business strategies. He has been actively involved in the sustainable development domain in India, managing sustainability programs, implementing sustainability projects for major manufacturing and service industries. He has also implemented sustainability projects supported by USAID, Mahindra and Mahindra Limited, GAP International, GE Foundation, MacArthur Foundation, the Walt Disney Company, among others. Just before we delve into the content of this webinar, a few housekeeping items. This webinar is being recorded, and the recording will be shared in our YouTube channel at BDO East Africa. Please use the Q&A feature to submit your questions at any time during the presentation. We'll address as many questions as possible during the Q&A segment at the end of the session. And if you experience any technical issues, please use the chat feature to contact our support team. So without further ado, let's get started. I am pleased to hand over the session to our first speaker, Mr. Zahir Sheikh, who will introduce the key concepts and provide an overview of today's topic. Zahir, welcome.
Thanks so much, Joseph, and a very good afternoon, good morning to all of you who are joining us from different parts of the world. It's afternoon here in Nairobi, and I think it's late afternoon in India at the moment. So yeah, very, very excited to be with all of you. As usual, let me just say a few words about BDO for those of you who may not know BDO very well. BDO is a global audit and advisory and tax practice. We have a global footprint. We're actually the fifth largest global professional services provider worldwide. Last year, our revenues exceeded 14 billion US dollars. We have a footprint, as you can see on that map there, in all of the gray areas, so which is over 166 countries. We have close to 1,800 offices in all those countries, and we work in those offices with over 115,000 professional people, primarily in audit and assurance, advisory, tax, and business services and outsourcing. Next slide, Joseph. Just to tell you a little bit about the kind of services we provide. So we provide a full range of audit services, including statutory audits or acting as external auditors. We also provide specialized audits of special projects, of donor-funded projects. We provide internal audits. We also do a lot of training on FIRS, as well as technical standards. And then for taxation, we have a full range of taxation services, both on the compliance side, as well as on the advisory side. We will do things like tax audits, tax reviews, tax health checks. We provide a lot of advice on transfer pricing. And recently, we've done a lot of training on that as well. We provide advice on employment tax, as well as expatriate tax, and on corporate international tax planning. We also provide advice on indirect taxes and on customs duty. And we have a particularly strong, large tax disputes resolution division, which has a very good track record of fighting large tax cases with the revenue authorities. And we've got a good track record of actually getting some money back from them. So if you have any of those issues, please do feel free to contact us. And then on the business services and outsourcing area, we provide a full range of outsourced services. So these are services which our clients don't want to have in-house. They prefer to outsource them. So we will do things like accounting and bookkeeping, the compilation of management reports, statutory annual reports. We provide financial management agent services, as well as fiscal management services. We provide payroll services, legal services, company secretarial services, and all other kinds of admin and accounting services. So if you're looking to kind of cut down on your costs, be sure to speak to our business services outsourcing division. And then where I sit, I basically head the advisory services division. And again, we have a full range of services. Just one of those is sustainability and ESG. But we also provide internal audit, which is outsourced internal audit. So, typically this kind of service results in a saving of 60 to 70% for some of our clients. So we're looking at a huge saving. And then you also get global experts coming in, okay, and doing your internal audit, typically over, say, for example, 4 quarters. And this, for the people we do this for, they found this extremely useful. We also provide a whole range of risk management services, management consultancy services, business turnaround and corporate recovery services, corporate finance and transaction advisory services. And some of you may know BDO globally is actually a market leader in this area. For a number of years now, we've had the highest number of deals in terms of numbers, not in terms of value, but in terms of numbers. We've had the highest number of deals for a number of years. And what that says about our people is that because deals can only be done on a basis of trust, that our people, especially at the leadership level, do have the trust of their clients. So that's a key area of service that we're very proud of. And then we provide forensic investigation services, again, which is very close to my heart, a whole range of technology advisory services, cybersecurity, and so on and so forth, and also business intelligence services. Next slide, please. So what we're going to talk about today is what we're doing today, as well as what we did last time, and then what we're going to cover in our next two webinars. So last month on the 24th of April, we took participants through part 1 of this ESG webinar series, which was called Demystifying ESG. So for those of you who missed this session, you can find the recording on our YouTube channel, which Joseph alluded to. It's called BDO East Africa. If you just go to YouTube and in the search, you just type BDO East Africa, you'll see, and you can get this session. But you will also find lots of other training material on diverse topics such as risk management, internal audit, fraud prevention, detection and investigation, specialized audits, tax and transfer pricing, training, cybersecurity, data privacy, and a whole range of other trainings and webinars. So in part 1, we introduced what is ESG and its critical role in sustainable business development. We discussed the concept of ESG as a framework that addresses the environmental, social, and governance aspects of business operations, all of which aim to create long-term value in a business. Our experts talked about a number of ESG frameworks, such as the GRI, the SASB, and the UN Global Compact, or the UNCG. These frameworks help businesses to measure and to report their ESG performance, and they ensure transparency and accountability. We also touched on the evolving landscape of ESG regulations, and we highlighted the increasing pressure from both investors as well as regulators for comprehensive ESG disclosures. One of the key points discussed was the tangible benefits of integrating ESG into business strategies. These benefits include increased investor interest, resilient supply chains, improved market valuations, and better risk management. In part 1, we also debunked the myth that sustainability initiatives are costly and that they do not contribute to profitability. I mean, nothing could be further from the truth. We presented several case studies demonstrating successful ESG integration, and we talked about companies such as Schneider Electric, Unilever, Cargill, McDonald's, the KCB or the Kenya Commercial Bank Group, Bamburi Cement, and Safaricom. And we used these examples. We showcased how their innovative approaches to sustainability, from reducing carbon footprints to promoting responsible sourcing and also achieving net zero emissions. We talked about the common challenges that businesses face in implementing ESG practices, such as managing the supply chain risks, regulatory compliance, and also mitigating reputational risks. We gave some examples of practical solutions, including things like robust governance, stakeholder engagement, and also adopting a sustainable supply chain framework. So if you missed that, basically, please go back to our YouTube channel and you will get the webinar from there. But basically, we concluded that first webinar by underscoring the fact that ESG is not just a trend, but it's a vital component for achieving long-term business success. Now, we got a couple of webinars. Today's part 2 is on materiality assessment and stakeholder engagement, and I'll just say a few words about that just now. But then we've also got part 3, access, where we're going to explore how to create an ESG roadmap. And we'll guide you through the steps which are needed to integrate the ESG principles into your business strategy. And then finally, in part 4, report and measure, which is going to be our final session, we will delve into preparing and submitting sustainability reports and determining ESG maturity to ensure that you can effectively communicate your ESG performance and progress. So let's talk a little bit about today's webinar. Today's webinar is entitled Materiality Assessment and Stakeholder Engagement. And here we aim to shed light on two key aspects of ESG integration, which is materiality assessment and stakeholder engagement. So, why is this important? Well, materiality assessment helps businesses identify and prioritize the most significant ESG issues that could impact their operations and stakeholders. So, by focusing on what truly matters, companies can allocate resources effectively, enhance their transparency, and also build trust with their stakeholders. And then stakeholder engagement, on the other hand, it involves actively involving those who are affected by or they can affect your business activities. So, effective stakeholder engagement fosters better decision making, risk management, as well as long term relationships, ultimately leading to more resilient and sustainable business models. So, our speakers today will also discuss the concept of double materiality, and they'll share some real world case studies which will guide you through the steps to effectively engage shareholders and assess materiality. Next slide, Joseph. So all I want to say on this particular slide is that please mark these dates in your calendar. These are dates for part 3 of our ESG, which is on Wednesday, 19th of June. And then part 4, which is Wednesday, 24th of July. And I'm hoping that all of you will be able to join us in those webinars as well. So let me now hand over to our first speaker of the day, Indra Guha, who is our sustainability and ESG partner. Indra, please go ahead and dive into the details of today's presentation.
Sure. Thank you, Zahir. Thank you, Joseph, for the wonderful backdrop. Hello, everyone, and a warm welcome to this session. I'm very happy to be part of this entire exercise that we are going through, and thank you all for joining in. So before getting into the topic that Zahir explained about materiality and stakeholder consultation, this slide that we have kept for this particular session talks about the different areas of sustainability that as a business and as a service provider, we all need to kind of look into. These are some of the areas that we are working deeply in BDO and seamlessly across the different locations of BDO. So in BDO, the country practices work together jointly, collaboratively, as you can well see. And what we do is we bring in our expertise to provide the best solutions, best services to our clients across the world. Quickly taking you through some of the solutions. If you look at the list of solutions that we have ESG diagnostics framework and strategy as one of our key solutions. Now, today's session on materiality and stakeholder consultation is part of this particular bucket, you can say, where it involves a diagnostics, conducting a materiality assessment, followed by a maturity assessment. Right at the end of today's session, we'll talk something about the connectivity between materiality and the next steps on sustainability. Followed by this materiality and maturity comes a solution around developing a framework, developing a strategy, and aligning this sustainability strategy or ESG strategy to the business plan or business strategy. And this is again linked to the previous session that we had a few days back that had actually touched upon this. And integrating sustainability into your business is of key importance. Integrating across the functions is of key importance. And that is where the foundation, the first steps are very critical, which is conducting a materiality assessment, which we are talking about today. Moving on, if you go down below after the ESG diagnostics, we are looking at ESG disclosures and non-financial assurance. This is another forte that we have, a set of solutions where we help organizations to develop reports, non-financial reports, aligned to all the global guidelines that we can refer to. So anything under CDP, under SASB, CSRD coming into play, IFRS coming into play, we help our clients develop reports, develop disclosures aligned to all these global guidelines and frameworks. Along with that, we also provide non-financial assurance to the disclosures, which is an independent third-party assurance to any report that you prepare. We are licensed both under WA1000 as well as, of course, as an audit firm, we can provide assurance under ISA 3000. Moving on to the third bucket of solutions, we are looking at ESG risk resilience or performance improvement. This is gaining in importance every day. Organizations, our clients, they want to improve performance on some of the platforms like Dow Jones, Morgan Stanley, EcoVadis, Hig Index. Depending on the sector, depending on the requirement, what we do is we engage with the organizations and we help them improve their performance score on all these rating platforms on ESG count. Right at the bottom left corner, you are seeing ESG digital solutions. This is one solution that we have where we help organizations develop digital tools to enable them to manage ESG data, ESG monitoring in a better way, and to integrate ESG into their day-to-day business in a better way. So that is more about managing ESG inside the business and what kind of a tool can actually help an organization to integrate and seamlessly monitor the performance across the different functions. So that is where we come in. Climate action, resilience, and neutrality. This is one major solution suite that we have where we talk about carbon accounting, we talk about climate risk and scenario analysis and TCFD reporting. Many of you might have heard about that task force on climate-related financial disclosure. That is an area where we actively help organizations to kind of align to. And also, before reporting, there is a lot of exercise that an organization needs to do in order to align to TCFD. So that is something which we take organizations through. And along with that, we develop a low carbon transition roadmap for the organizations as well. Apart from that, you are looking at sustainable energy, which is at the bottom of the slide, central panel. There we look into the energy performance of an organization in the entire value chain, and we help them improve on the energy performance, which is very closely linked to climate action and carbon footprint. And on the right-hand top, you're seeing sustainable healthcare, where we try to connect the dots between the relationship between climate impact on health in different geographies, particularly in projects run by the World Bank, World Health Organization. We work back with them in order to join the dots and in order to develop programs which help us assess what is the interrelationship and what is the long-term impact on health area. So if you look at the broad four buckets, one talks about the ESG, the second one talks about climate action, sustainable healthcare, and sustainable energy. So we bring everything together in one single integrated delivery platform. And that's where we bring in the advantages from BDO operating globally and serving locally in the different geographies. If we can move on, Joseph, if we can move on to the topic for the day. So from there, we move on to the topic, which is around stakeholder engagement and materiality analysis. Before I start talking about the specific areas, let me share a little bit about how these two are connected and which one is before the other. So maybe in the title, you have seen materiality assessment and stakeholder engagement. And here, I'm trying to talk about stakeholder engagement right at the beginning before even talking about materiality assessment. So these two go hand in hand. Whereas materiality assessment is an intervention that an organization needs to bring in order to map the material areas that it needs to focus on. Stakeholder engagement is not a discrete piece of exercise. It's a continuous exercise that an organization will have to get involved in. It is some kind of a exercise where there are no boundaries, and it has to be in each step of business, in each step of action that the organization takes up. In any of the functions, stakeholder engagement becomes very critical. Now, who are our stakeholders? A quick definition, if you look at the left and top arrow, it talks about individuals or groups with an interest in a company's activities who can be affected by the outcomes of those activities. So who can be directly or indirectly affected by the organization and who can have a bearing on the organization's business. So both ways, whichever entity is engaging with an organization, they will be considered as the key stakeholder for the business. A quick kind of a view on what kind of stakeholders we can actually broadly consider. We have, of course, business as definitely as the major stakeholder, along with the employees, customers, investors, the supply chain, the regulators, local communities, government. Anyone who falls under any of these buckets comes under the stakeholder group. Now, talking about why do we need an engagement, if you look at the diagram, the infographic on the left and bottom of the slide, It talks about the whys, the different drivers for stakeholder engagement. What does it give us? And what kind of areas are we actually looking at when we are talking about stakeholder management and stakeholder engagement? So we are talking about certainty of business outcomes. So when we are actually engaging with the stakeholders well, we are ensuring the sustainability of business. We are ensuring an effective risk management protocol, which will help us to identify risks at the right time and take up or design actions appropriately, which will help us mitigate the future risks that we might be exposed to. We talk about long-term relationships, which is an integral part of sustainable business. Without a long-term relationship that we develop with all our stakeholders, be it in the value chain, upstream or the downstream, or the customers, or maybe the government or NGOs, we cannot talk about sustainable business without developing a long-term, trustworthy relationship with all the stakeholder groups that we are looking at. So trust and goodwill comes in alongside. And at the same time, by engaging with all these stakeholders that you're seeing on the right-hand panel, we tend to get a 360-degree view of the business. We take a look at business from outside. We take a look at business from outside. That gives us the right perspective to design action, to develop a plan, develop certain targets for ourselves, develop a well-grounded strategy, taking care of interests of all the stakeholder groups. Joseph, if we can move to the next slide. It's not moving, Joseph. Joseph? Yeah, right. Thank you. Now, coming to now, once we have understood about who all are our stakeholders and why exactly we need to kind of engage with them and develop a stakeholder engagement strategy for each of the stakeholder groups. Now we come to how can we differentiate between different stakeholder groups and how can we categorize the different kind of stakeholders that a business will have to engage with. If you look at this particular graph, you have two axes. One talking about the stakeholder influence, the other one talking about the stakeholder interests. In many a case, we see stakeholders having an interest in our business and the influence on our business. It may be both high, and they may some of the stakeholders may be lying in the high quadrant. And this can be, see, a very quick example would be the set of employees that you have in a business. So they will be one of the critical set of suppliers that you might be having. Your supplier group may be falling under that. Your customers might be falling under that. So these are some of the high interest, high influence level stakeholder groups that you might be interacting with. So these stakeholder groups are of critical significance for business sustainability. And how do we need to, a very kind of a high level snapshot of what kind of engagements we need to have. We need to have a regular engagement with them, and we have to have them not even satisfied. We need to keep them happy. The word satisfied is probably need to be replaced by the word happy, and we need to keep them happy and engage with them to ensure their happiness. The second group of stakeholders that you're seeing on the right and bottom, which talks about low interest and high influence, here they are very critical to the business. They may not be having any direct interests in the business, but they are very critical. And in these cases, we need to monitor their activities regularly and anticipate what kind of policy changes, what kind of regulatory changes might be coming in the future, which will help us to put in place a well-rounded strategy to be ready for the future, to be future ready, to be future-proof. We will need to recognize these stakeholders and we need to engage them on a regular basis and anticipate needs from these particular stakeholder groups. Again, looking at the graph on the left and top, where we have the high interest, low influence level stakeholders. Here, these stakeholder groups have a very high interest level on the business and they are impacted by the business, but they don't have any direct influence on how the business is getting conducted or maybe how the business may be or the entire value chain may be impacted. So Here, what we need to do is we need to ensure that these group of stakeholders are having complete transparent information that gets passed on to them. And we need to monitor them closely so that their interests are well protected, because that also might be in the longer run impacting the business sustenance, and the market that the business is dependent on would be highly dependent on the stakeholder group as well. And the other group, the least important group, where there is no interest as well as no influence, this is something also we need to take cognition of, and that will help us develop a stakeholder engagement strategy in the appropriate manner. Once we know who are the priority ones and where we exactly need to focus on, the lenses are created, and the action plan can be aligned to the specific groups if we can cluster them in this manner. Joseph, if you can move to the next slide. Coming from the stakeholder engagement, we move into the specific area where stakeholder engagement rolls into materiality assessment. So when we are talking about materiality assessment, we are going to visit this part right at the end of the discussion today as well in much more detail. But broadly over here, materiality assessment, from the graph, you will be able to assess that it talks about identifying the critical aspects from the different lenses that a business needs to look into. I'm not defining the lenses right now, because that's going to be defined in the subsequent slides when we are going to talk about double materiality. But materiality comes from understanding of the stakeholders, engaging with the stakeholders, and identifying what are the specific issues, what are the topics which are most relevant, most important for the stakeholder groups, both from the impact point of view to the stakeholders, as well as impact from the stakeholders onto the business. Moving on from materiality, this will be the foundation based on which the maturity assessment will get done. And maturity assessment talks about where exactly is the organization lying and what kind of actions and activities the organization needs to kind of plan in order to move forward. Once these two pieces are in place, the rest of the thing, like coming out with the report in the appropriate manner, aligning it to certain guidelines and procedures, these we believe are an outcome which automatically happens. But putting in place the foundation blocks, which is of materiality assessment and maturity, these two are the basic foundation blocks that any business needs to put in place before moving ahead on their sustainability journey. And of course, once you're done with the reporting and disclosure, the last step remains on due diligence and assurance. So whatever you disclose need to be validated, verified, to increase the credibility of the disclosures, to increase the acceptance of all these disclosures to the outside world, to the stakeholders who are actually looking for your performance on these counts. With that, I would request my colleague and my other panel speaker, Tarini, to come in to take you through the details of materiality assessment and explain to you about the double materiality concept as well. Tarini, over to you.
Sure. Thank you, Indro. Yes. So picking up from where Indro has outlined the sequence of steps for any reporting entity to identify what is material, and then in order for them to actually proceed further to consolidate information against the identified topics. Some of the information that the broad outlay of this entire process is what you have on your display. Indro highlighted the significance of stakeholder engagement, in which you are trying to take into account the perceptions, the sensitivities, as well as the concerns of certain stakeholder groups that a reporting entity encounters. So on to the left of your pane, you're able to, what is presented here is that you're going to look at any reporting entity, would like to look at what are the stakeholders, the internal stakeholders, how they actually view a particular topic with respect to their business. There are certain standards and guidelines with respect to the frameworks that are applicable for ESG or sustainability performance by companies, corporates, and reporting entities. The third aspect is a very critical aspect, which is taking into account what are the peer level practices both in implementation against priority material topics, as well as how do organizations, how do peers of the reporting entity view and assess and mobilize strategies against the said practices. The final aspect we have as a very integral component of the materiality assessment is the consultation with the leadership, because the leadership represent a group of decision makers, and it is imperative that any similar exercise needs to take into account not only what happens at the ground, but also how are decisions being taken on with respect to ESG implementation, risks or opportunities thereof. Once the organization has identified what are the list of topics to be considered, we prepare a consolidated, a universal canvas of topics from which the organization can actually pick or prioritize certain topics. The list of indicators associated with these topics are also available in the guidances and the frameworks that are represented by the Global Reporting Initiative, the SASB, the Sustainability Accounting Standards Board, the TCFD, or the Task Force on Climate-Related Financial Disclosure, and many other such frameworks. The third, the aspect where all of this come together is the materiality analysis workshop. Now, in this workshop, most commonly, it is represented by internal stakeholders, as well as that a lot of organizations which are already progressing on their sustainability pathway also choose to include external stakeholders. And that is what it provides a lot of credibility to the entire exercise. And the output of this materiality analysis workshop is that validation of material topics is undertaken with the company's senior management. There is prioritization of certain topics based on the indicative set of topics that you're picking up from the sectoral guidances, the peer level practices and such. And ultimately, now the organization has a visibility of what are the priority topics that the organization needs to take forward into the next sequential steps. We can move to the next one, please. This is just a very quick snapshot of the existing model of materiality that was in practice until past 2 years. And with the onset of the concept of double materiality, as Zahir was mentioning in the earlier, the move from prioritization of topics simply based on the importance of stakeholders and significance to the business, this has now moved towards something called a double materiality, where the two axes represent the impact materiality, which is basically the impact of the organization or the company on the external environment and the society. And the other is the financial materiality, where the impact of the external world representing the environment, the society on the organization. And this is the kind of this is the parlance that we will have to take into account when we evaluate each and every indicative topic that we have shortlisted in the earlier display that we were alluding to. We can take you through certain aspects of how this actually helps prioritize in a more meaningful way. Because as you can very clearly see on the earlier version that you had, there was a risk of underestimation, wherein a lot of organizations would normally skew their responses towards identifying those which were relevant to the business alone. And with the double materiality, now the impact materiality comes to the fore in a more meaningful way. We have examples to illustrate how organizations have gone about conducting this double materiality with their respective businesses. We can move to the next, please. The ESG materiality being central and integral to any sustainability, to the sustainability pathway for any organization, cannot be in exclusion to what is the evolving landscape with respect to sustainability frameworks and guidances. The Global Reporting Initiative for GRI has been in play right from 1997, and well over 12,000 to 15,000 companies report using the guidance that we have from this framework. SASB is the Sustainability Accounting and Standards Board. It provides more specific financial materiality through its guidances. And there you have a sectoral kind of coverage. Well over 77 sectors are covered in that. And you have prescriptive indicative topics in those standards. The TCFD, or the Task Force on Climate Related Financial Disclosures, is a very prominent framework which summarizes what are the aspects that any organization needs to take in order for them to evaluate their climate related risks and opportunities into their final corporate reporting. The CDP, or the Carbon Disclosure Project, also aligns with the climate reporting. The two geographies in the recent period, the two geographies that have actually defined or outlined, pointed the needle in the right direction, one is the European Union, where the Corporate Sustainability Reporting Initiative, which replaces the Non-Financial Reporting Initiative, NFRT, that introduced the concept of double materiality. And this is where double materiality actually took off. And a lot of other frameworks and geographies then started to adopt the concept of double materiality in its current form. Even GRI as a framework has recently updated or incorporated the double materiality into its prescriptive framework. There are also other geographies like the Securities and Exchange Commission from US, where they have come out with a climate disclosure rule that mandates listed entities to report on their climate related risks and opportunities. The same is happening in several other geographies, and I'm sure as Zahid was alluding to, the first webinar that we had, that details out a lot of what were the changes and what are the movements and the developments that have happened in the sustainability reporting domain in the past couple of years. We would encourage you to actually take a look at that in context to how ESG's materiality has shaped. We can move to the next one, please. This is a very interesting snapshot that we have, which actually presents to you how organizations, how different geographies have actually come together to consolidate a set of disclosures for adoption. And to that end, all the different frameworks and guidances that we saw in the previous displays, you can very well see that either they influence or consolidate in the formation of central frameworks like the International Sustainability Standards Board, ISSB, which feeds off from the IFRS S1 and S2. To the right of your screen, you would see now this is the most consolidated frameworks that you have. There's a lot of there's alphabet soup with a lot of frameworks, references, abbreviations flying around. And currently, with starting from the COP26 is when the move towards consolidation of frameworks actually happened. And currently, we have the IFRS S1, which very specifically looks at the sustainability disclosures, sustainability related financial information is present. And then you have the climate related disclosures, which are embedded within the IFRS S2. So for any organization reporting entity, if they want comparability of their disclosures with that on the global scale, the IFRS S1 and S2 form the basis of a very neat way to actually have comparable performance disclosures. We can move to the next one, please. What you have on your display now is another very interesting concept, The aspect of how different geographies are driving sustainability within their operating boundaries. This is the Sustainable Stock Exchanges Initiative is a United Nations partnership program between different agencies, as listed here, where they give guidances to within the SSE platform. Different stock exchanges from different geographies are registered, and currently, as we speak, we have close to 73 stock exchanges with written ESG guidances available. For your quick reference, we have just pulled out one of the stock exchanges, the Nairobi Securities Exchange, as a stock exchange, which has disclosed its ESG guidance in 2021, and it's already, and you can see that it is aligned with the GRI and the CDP disclosures as we speak. And what we can pick up from this is that for every stock exchange has a prescriptive set of guidance for its listed entities. And while organizations which are listed within a particular geography take note of this and influence their direct operations, the indirect operations also are then informed by what kind of guidance the listed entities undertake. And that is what is the anticipated impact of this evolving sustainability landscape that we see. And I would encourage you to take a look at the SSE website, where you would find for your respective geographies from whichever part of the world you are joining this webinar, you can actually look at what are the different geographies and what are the types of guidances that are already aligned and integrated therefore. We can move to the next one, please. This is again just a follow-up of the Nairobi Securities Exchange ESG disclosure, where they have called out what a reporting entity needs to take into account in order for them to implement double materiality, wherein the type of approach that an organization needs to do, what are the types of verification that the organization needs to do. How does the organization then understand what are the types of stakeholders that you take into account, and the trends in the respective sectors. So while all of this, as I was mentioning earlier, that a lot of frameworks have now taken up double materiality as a very central element of any reporting entity to embark on its sustainability reporting. All of this can be traced back to the European Union's CSRD document on SAFE. And a lot of ESG disclosures now are being mandatorily required to be disclosed by the listed entities across different geographies. We can move to the next one, please. Diving a little deep into the double materiality concept. Just can we move to that? Yes. So this is a standard process flow, but as you can imagine that company to company or the reporting, depending on the nature of operations or business of the reporting entity, either of these steps or a combination thereof would have very specific coverage of how they are identifying, consolidating, and then reporting against the material topics. So in the materiality, the double materiality assessment, the first step is always the identification of material topics, where you start with an exhaustive list of indicative topics based on global reporting standards and frameworks, and that of your peer level reporting. So all of this sectoral preferences, all of this you take into account, you have an indicative set of topics. You take the indicative set of topics and you engage with consult. There is a series of consultations involving both internal and external stakeholders, wherein the preference, the selection or the identification, the prioritization of the material topics from the larger list of topics that we have taken, that is based on the perceptions of internal and external stakeholders participating in this. To start with, most reporting entities start with the consultations with the internal stakeholders. And then as they gradually as they graduate in terms of maturity in reporting against the said topics, they're able to then incorporate or engage with external stakeholders in a more meaningful way to come out with a wholesome output for step 2. Step 3 and step 4 are two facets of the same similar exercise, wherein we are talking about the two axes, if you recall, on the double materiality matrix. We had one is on the impact materiality, wherein the stakeholders actually help identify topics based on the severity and the likelihood. Under the impact materiality, the CSRD, the European Union's the initial guidance on double materiality, this looks at how evaluating the topics based on three other levels. That is the scope, the scale, and the remediability of the impact. Now, stakeholders, internal and external stakeholders, help the reporting entity to identify topics which are relevant on these three levels. And what is the scale of the impact for any material topic? Is it a global scale? Is it only limited to a smaller level? On the scope of the impact, as well as on the remediability of the impact. Are the impacts that are derived from a particular topic, are they irremediable, or are they manageable in terms of how they are getting mitigated and remediated therefore? Once you've conducted the impact materiality, the reporting entity can then take the prioritized material topics from step 3 and bring it to the cognizance of the senior management or the decision makers in an organization, wherein the financial materiality or the assessment of financial implications of the identified and prioritized material topics are undertaken. All of these are consolidated in the final double materiality matrix, where you are able to understand what are the results from the impact materiality and financial materiality coming together to inform decision making in an organization. And this constitutes the final set of the materiality matrix. And the next step, obviously, is for the organization to then identify what are the indicators that are associated with the priority material topics that are identified in the finalized double materiality matrix. You can move to the next one, please. Here are a set of case examples that we would like to present to you. This is our team has been working. We have implemented a double materiality session for exercise for a leading global steel company. And here we have taken one example, one topic. So just to give you a illustration of how we went about it, taking the topic of climate change. We look how climate change actually impacts what's the impact of the organization on the external world with respect to climate change, wherein we would look that, okay, it is a steel company. So therefore the sector is energy and carbon intensive. Therefore, what is the outward impact going to be? How can this be quantified? What are the types of impacts that they have seen in the recent past? What are the opportunities? What is associated with this particular topic? And on the other end of the spectrum, we also look at what are the inward threats in terms of uncertainty with respect to climate change. So the climate change, what are the impacts that the company feels with respect to pressures from regulatory authorities, from the neighboring society communities that they operate from? So the outside in and the inside out, both the axes are then evaluated for every indicative topic that we take into account. And then, therefore, for every indicative material topic, we have a score which is on the inside out and one score with the outside in. And consolidated together, we then have a priority set of topics which would have a high score on the inside out and high score on the outside in. And that will constitute the final materiality. We can move to the next. The next is, we have just given you an example while we have just given you an example of how we have done it for one particular topic. This is an example from the Kenya Commercial Bank. So for KCB Group, they have to the right of your screen, you can see there is a materiality that was conducted, engaging the different types of stakeholder groups on the left of your screen, wherein you had business partners, customers, suppliers, government, regulatory authorities, employees, and investors. And you can then see the identified material topics that you see on the bottom of your screen, including climate change, operational efficiencies, product innovation, customer experience, and such. So similarly, the organizations, every organization needs to actually account for what are the material topics that have an impact in embedding the concerns of the different stakeholder groups that they routinely engage with. You can move to the next one. This is an example of how we did the double materiality for a global pharmaceutical company. And the topic here we had taken was consumers and end users. Now, this is again one of the specific prescribed topics of the CSRD framework, the Corporate Sustainability Reporting Directive. And it is already a prescribed framework which is mandatorily required to be reported. Here you have the similar kind of approach we took, that for this particular topic, we then identify for, as a pharmaceutical company, what is the patient-centric design and business models? How do they actually play out here? What are the sectoral kind of sensitivities that you have, which would ultimately consolidate the inside out, or the impact of the organization on the external environment, the society at large. And on the other end of the spectrum, we're looking at how the developing processes and infrastructures are addressing patient grievances, and how cutting price margins, how do they actually improve access to medicines for the product line that the organization has. So you can see that for every, so this is as we did with the environment dimension. Here also we are looking at, for every topic, we are trying to look at what are the ways we can actually derive the impact based on these two lenses. We can move to the next one, which gives a case example of by the East African bureaus. And here is one example how they have gone about incorporating or implementing double materiality into their disclosures, where they have also looked at a wide range of stakeholders and arrived at a sequence of topics which are significant to both their internal and external stakeholders, but they qualify, they have used a similar kind of methodologies to bring this about. Can we move to the next one, Joseph? Finally, on the governance dimension, here is a leading real estate company that we've been engaged with for a couple of years now. Here we taking the example of a topic called corporate governance. Similarly, we carried out inside out kind of assessment where we understood, gathered what is the emphasis on strong governance frameworks that would help the organization mitigate risks and such. On the outside in aspect, we looked at what is the type of, in response to the sensitivities and the perceptions of external environment, the communities, the stakeholders in the external environment, what is the type of trust building that the company needed to actually invest in. And that's where that gives us a very neat evaluation of how corporate governance plays out for a real estate company. Can move to the next one, please. In a case example that is closer to home, NetBank has an excellent, they have a very impressive sustainability report. And you can see that how they have gone about implementing double materiality in their scheme of things, where they have identified what are the critical issues. They have prioritized those material topics, and they have also assessed those material topics with the help of the different stakeholder groups that they have. So all in all, Joseph, as we move to the next slide, this summarizes the concept of double materiality concept. Now, for organizations, this is only the starting or stepping stone, where they have only identified what needs to constitute their sustainability or their emphasis for their journey forward. The immediate next steps are, once you have identified what are significant in terms of environment, social, and governance aspects for your organization, you need to understand how these are aligned with your functional groups. For any organization, irrespective of which industry or sector they represent, there are different corporate functional groups which need, it could be from strategy, from legal to operations, procurement, and finance, and several others. You need to understand that, okay, the responsibility of implementing ESG or sustainability in an organization cannot be the onus of only one single sustainability team or a HSE team. It will have to have accountability, would have to have a cross-functional flavor. And that is where you look at what is the functional level alignment. If you recall, one of the steps that Indro was mentioning in his presentation was that immediately after materiality, you conduct a maturity assessment. So the functional alignment is basically to understand what is the level of maturity that a human resource team in an organization has with respect to the leading peers, leading practices therein, or a finance team within the company, how does it map it to the leading practices? So how is ESG integrated within the respective functions? Once we have established this, it provides us a current state or a gap assessment of what are the gaps in terms of each of the respective functions in implementing ESG in their regular functions. And that is where the third step, which is the identification of gaps associated with systems and procedures comes into play. That we now know, okay, there is a particular topic that the HR function or the human resource or the finance team are lacking. And that is where you will have to embed some of those into the policies, the standard operating procedures. You might also have to identify what are the types of ESG risks, if prioritized, which would qualify to be integrated into your enterprise risk management framework. And therefore, the risk integration allows for the organization to take view of all the ESG risks up until the board level review, because the governance aspect needs to be intact in order for the implementation to be done more equitably at the ground level. The organization also can take into account how sustainability related goals, targets, and key performance indicators can be assigned based on what topics you have actually prioritized. And all of this can, the output is a transparent sustainability reporting. Finally, once you bring all of these moving parts together, this forms the basis of a very robust sustainability framework in place, wherein there is a very integrated culture of embedding ESG within the responsibility roles and responsibilities of different functional groups. You have strategies and risk drivers that are getting mobilized. Organizational policies and systems are getting refined. Operational engagement is directly impacted by the implementation of ESG within respective functions and as a collective for the organization. And finally, monitoring, reporting, and improvement of ESG performance by the organization is ensured. And it is a cyclic process, as consistent with the ISO methodology, where you have PDCA, the Plan, Do, Check, Act. Similarly, for ESG, I think so it is a continual improvement that ensures the organization is in the right stead in order to not only identify opportunities for them to reinvent and reinvent their performance on ESG, but also keep a consistent check on what are the leading practices and how can an organization catch up with the leading practices and demonstrate that in its own pathway. I would pause here. I think so we are to the end of our presentation. And on behalf of the panelists, we'll just pause here. We can take any questions if any participants have at this moment.
Thank you so much, Indra and Dr. Tarini, for the insightful presentation. And thank you so much for my own behalf and everyone who has joined us today. We have learned a lot on the prioritization of materiality assessment and stakeholder engagement. From my side, I don't see any questions. Maybe if I can just give a minute to everyone if there's any question, because just drop in a chat so that our experts can answer us.
It seems you gentlemen were very clear.
Yes. Ladies and gentlemen, we hope you found the session valuable and gained useful insights into material assessment and stakeholder management. Thank you again for attending, and we look forward to seeing you at our future webinars. I wish you all a wonderful day to those in East Africa and a wonderful evening to those joining us from India. Thank you. I wish to end it here. See you in our next webinar. Thank you.
Thank you. Bye-bye.
Thank you. Bye-bye.